And we are live. What's going on, everybody? Welcome back to Treasury Edge. Very excited to chat about these markets. We have Dave and Hyunsu coming over from Hyperion DeFi, talking about the crypto treasury space as a whole, or the digital asset treasury, DAT for short. I'm sure you guys all know how they kind of work into these markets. All these markets are starting to blend together. And so whether you're coming from the crypto side, from the stock side of things, even from commodities, everyone's kind of interested in this industry as it continues to develop. Hyperion is a publicly traded crypto company built around clear conviction around Hype tokens, specifically in the Hype ecosystem. So I'm really excited to be joined by these two and get into this. And big shout out to them as well for being partners here. If you guys want to learn more about them, I'm going to link the prospectus in the tweet right below the stream as well. So be sure to do your own due diligence. That'll take you to more information if you guys want to find out more. Be sure to give them a follow right above our faces as we get into this discussion. Guys, thank you so much for joining us. Dave, if you want to get just like a quick brief introduction, and then I'll go to Hyunsu after as well.
Thank you very much for having us. I'm Dave Knox. I am Chief Financial Officer. I've spent all of my career up until joining Hyperion DeFi in traditional financial services. I was at SoFi, I was at PayPal, I was at Cantor Fitzgerald. I learned how to scale profitable financial services businesses. I came across Hyperliquid for the first time in the summer of last year, and I believe it is the future of finance. I think more and more financial activity is going to move onto the blockchain. I think this blockchain in particular has the best tokenomics, the most attractive profile, and the best ability for a public company like us to build scalable revenue generating businesses on the blockchain. And I'm very pleased that Hyunsu Jung hired me to perform this role. Hyunsu, over to you.
Thanks, Dave. And hey, everyone. My background is in DeFi. So prior to Hyperion DeFi, I was working at Dharma Capital, billion-dollar asset manager registered with the CFTC and the NFA. And while I was there, I focused on two key roles. One of them was moving about $1 billion worth of ETH following the merge to proof of stake into validators. So validators restaking volatility strategies on staked Ethereum. And on the other side, I deployed around $300 million worth of Filecoin, or Phil, into the global data center ecosystem, over 50 data centers to help store data using on-chain primitives because of the utility tied to the file token for each quantity of data stored. Obviously, the issue with the protocol at the time was it was very difficult to commercialize a product like Filecoin when you had existence of incumbents like AWS, Azure, and so forth. And when I discovered Hyperliquid in 2023, they were building an entirely new financial system on blockchain rails. It has huge product market fit, and we saw a really unique ability to take the utility of the Hype token and recreate the products that I built at Dharma in a public company vehicle, and also have the opportunity to generate significantly more revenues while providing exposure to retail and institutional investors.
Very cool. And just a quick follow-up. What do you think are like the biggest takeaways you pulled from that experience kind of leading into this new thing with Hyperion?
Yeah, I mean, it would just be that the interoperability of digital assets enables you to do so many compounding mechanisms to generate returns, right? So for Hyperion with Hype today, we have our own validator, the Kinetic X Hyperion validator. We have around 11 million Hype that's been delegated to our validator, from which we receive commissions for providing validation services to the network. But more importantly, we can take that staked Hype and redeploy it into products like the Hype Asset Use Service, which can reduce client fees by up to 40%. Those savings, a percentage of that comes back to us as revenues. And then more exciting are the markets that you can launch on Hyperliquid, such as the HIP3 markets that we launched with our partners Felix, which enables equities like Tesla, Circle, Coinbase to trade, as well as commodities, gold, silver, copper, platinum, palladium, and even FX are all trading on Hyperliquid today. And those are revenue sources that are routed to our company. And so all of that requires Hype to be staked the same way Phil had to be staked to store data. So different primitives, but same mechanism. And we think that was really, really compelling approach to do with Hyperion and this vehicle.
Very cool. Yeah, I was going to say because people in the crypto space, I mean, well, this goes, I guess, for all markets. I just, specifically noticed in the crypto world, price leads narrative. It's usually not the other way around. So people get so nervous with the crypto ones because, if it goes up, then it almost doesn't matter what the announcement is. If there's an announcement at all, they're like, let's go. Sometimes it goes the other way around. So what would be would that be one of your main reasons to, I guess, to stack Hype as a more of like a long-term investment rather than a trade? I know some people in crypto, they look basically at Bitcoin, Ethereum, and they're like, and everything else, they're not so fully sure about. What other things, get you excited about Hype super long term?
So it's actually incredibly timely that you talked about price and narrative, because if you look at the markets today, right, explosive moves, right, Bitcoin, gold above $5,000 per ounce, silver. I mean, I haven't seen moves like this in metals in forever, really. So what, about 120 per ounce, and a lot of that volume was actually done today on Hyperliquid, specifically on the HIP3 markets. So Hyperliquid itself, or the Hype token, moved about 14% today compared to around 2% on Bitcoin, which we think is like a really stark contrast, because usually Bitcoin drives movements in alternative tokens. But I think we are starting to enter a new paradigm when products that are just happen to be built on blockchain rails have greater tailwinds. They're enable users globally to trade more products, and unique revenues are being created. And 99% of the revenues generated on Hyperliquid are going back to purchasing and burning the Hype token. So that's a deflationary mechanism that is not seen in any other ecosystem. And I'll pass to Dave quickly so we can speak to the other majors and the key components, differences that we're seeing between these assets.
Yes, thank you, Hyunsu. And to the point before on like price driving narrative or fundamentals driving narrative, I've built my career on the fundamentals, and that's why Hyperliquid is so exciting. It is the #1 revenue generating blockchain cryptocurrency, period. About $850 million of fees generated to the blockchain, all of which are buying back tokens, generating organic buying pressure to support the price of the token higher, essentially. If you look at Bitcoin, it's the original, it's the OG. There's a fixed, total supply. It's not actually useful in the financial ecosystem. It doesn't have a native yield. Everyone knows it consumes. It utilizes a lot of energy. If you look at Ethereum and Solana, those are useful. However, they don't have a fixed maximum supply, which means that it's generating fees, but there's also more tokens happening. So you need to do the math very carefully on, are you actually making money on your investment, or are you inflating yourself out? Hyperliquid is the best of all worlds. Okay, there's a fixed maximum supply at 1 billion tokens. Meanwhile, it's generating all these yields from launching new markets, from staking, from commissions, from all these strategies that we've built. And all of the fees in the blockchain are buying the token and eliminating the circulating maximum supply. So as Hyunsu said, it's up 14-15% today, above a key, what we think, psychological level of 25. And it's exactly because of all these fundamentals. It's supporting new markets. This is not just a token that's based on crypto. It is DeFi. It is faster, cheaper execution, quicker to innovate and execute. And with all these markets moving in metals, it's a clear winner here, unlike the traditional crypto narrative. And adding to the point, unlike any other company out there, we have a digital asset treasury that is valuable and productive. We have multiple revenue generating business lines concentrated on Hyperliquid. I gave guidance in our third quarter earnings call of 31 to 43% adjusted quarter over quarter earnings growth. We're going to be releasing earnings in a few months' time, but we are much more of a fintech operating company building on the blockchain, innovating in all of these markets. And it's such an incredibly attractive time to be thinking about us, especially as the market is beginning to recover, as volumes are returning, and from our perspective, the technicals are starting to flip.
What other things, you mentioned a few things. I guess you could sort of maybe paint the picture of like people almost misunderstanding the space. There was a period where everyone was launching a DAT company, and then there was a period where it started to slow down a little bit, and then there was a bunch of FUD, and then people kind of cooled down. Then the metals ran, everyone forgot about it, and now we sort of recycled. But what kind of things do you guys think people misunderstand about the digital asset treasury space?
I'll start, and I think it's really about composition or asset selection and differentiation. There are a plethora of BTC, Ethereum, and Solana treasury companies. You are starting to see how some of them are trying to differentiate. I think of BitMine and their recent $200 million investment into Mr. Beast kind of IP, and then ETHZilla recently purchased 2 jet engines. So, just trying different things. But I don't see how it is effectively or directly contributing to value to Ethereum, right? Whereas with Hyperion, everything that we've done, from our validators to staking operations to onboarding financial institutions to trade on Hyperliquid through our products, creating the markets, and then also contributing directly to the Hyper EVM or the smart contract application network, is all very additive, right? Everything becomes more accessible. It becomes institutional grade, like the work that we've done with Kinetic and our institutional liquid staking token, iHype. And these kind of activities, especially in a very young ecosystem like Hyperliquid, give us the opportunity to really compound everything that we've built as it grows. And the best example I like to give is, back in 2018, 2019, when Ethereum was below $100, right? You go into 2020, you get DeFi summer, and you have the first explosion of applications like Aave for borrow lend, Uniswap for swapping tokens, Curve for stablecoins. And early participants were rewarded not just with yield and exposure to these governance tokens and airdrops, but also you had this scaling effect of Ethereum going from $100, $300 to $3,000. The product base and user base obviously grew, but you had a lot more of expansive capital to use for new activities. And so with Hyperion, we believe we are operating at like the $85 ETH level today, and working towards a much higher multiple where our validator returns, everything that we're doing on a HIP3 markets, the products that we built will actually generate significantly higher multiples in both Hype and in dollars, and which we will use to continue to purchase and scale our business operations. That's the really differentiated opportunity that Hyperion DeFi is providing to investors.
Very cool. Do you think like that those should be the metrics? Anything else come to mind for the shareholders when they're looking to sort of track, I guess, company success over time?
I think it's also really important to look at the management teams, like how aligned and they are with their ecosystems. Are they here? Like, nothing against other digital asset treasuries at all, right? But I think there were some that looked at it as a quick trade. If you launch a DAT and you raise money and you buy a digital asset, you're going to trade higher than your net asset value, and you can arbitrage between the value of the equity, this and that. Others, or I think the ecosystem is a lot more mature. I still think Solana and Ethereum are also early, but they're already $100 billion plus protocols, right? Hyperliquid is trading under $10 billion circulating today. And so there is a magnitude of an opportunity that's greater, but we are fully aligned and have undying conviction in what Hyperliquid is building and will continue to build, and how we can directly contribute to that growth.
Yeah, and if I just add on the alignment side, and reinforcing a lot of the great points that Hyunsu made there, we think the Hyperliquid blockchain and the Hype token, being less than 2 years old and already in the top 12 or 15 of all cryptocurrency digital assets, is a testament to what they are building and what they are building sustainably. This is not a meme. This is not a trend. This is real innovation in financial markets supported by real revenues and real fundamentals. And we're building on top of all of that. If Hype is worth as much as Solana, Ethereum, we're talking 10x, 1,000x plus. And we think that the fundamentals of how they're positioning more people to trade faster, cheaper, and frankly more easily is aligned with that long-term trajectory, unlike any other token. And then in terms of alignment, as Hyunsu outlined in our shareholder letter, and if you're looking for it, you can find it on our website, hyperiondefi.com. Me and other directors and the board purchased over 180,000 individual Hyperion DeFi shares in December. I personally bought $100,000 worth at 3.59 at the very end of December. We have extremely strong conviction and alignment that this is not a trend, this is not a fad, that we're building scalable recurring revenues on the most attractive digital asset in blockchain. And sometimes that gets lost in the noise of, what's your MNAV and how many shares and, what sort of leverage are you doing? We're so different from that whole entire narrative. And in time, we're going to prove it. We're going to prove it with revenue growth. We're going to prove it from the metrics on the blockchain. And we're going to prove it on all the partners that we're going to bring into this ecosystem and show that this is a whole paradigm shift in what it means to operate financially efficiently.
Do you think, what do you guys think is going to be the this could be, I guess this could be a professional or personal take as well. Like, what do you guys think it'll take for the crypto treasury and digital asset treasury space to go more mainstream? Is it going to require a couple of main leaders to come out? We have obviously the MicroStrategy, Big Michael Saylor, that guy, and Tom Lee and some of those guys who are up ahead. They're big, loud, they're very well known, those kinds of things. Do you think it's more of that? Is it ecosystems like the Hype ones coming up and many others? I'm sure that will also. Like, where do you think? What do you think is the main driver? What is going to move the needle the most?
Really great question. I think it is multivariate. You talked about pricing narrative earlier. What we saw today with HIP3, and again, markets on Hyperliquid that are trading non-crypto assets like equities, commodities, and so forth, are really starting to reach like record volumes. They've been up and to the right. And so usually when you're in a position when all of the fundamentals are increasing, just baseline statistics, and the price is declining, there's a pretty significant delta between where's the valuation and where's the opportunity. We saw the opportunity from the very beginning, which is why we continue to build these products. And when it comes to each digital asset treasury, we think that pretty simply, like you see in most other industries, there will probably be 2 or 3 leaders of each. And it ultimately comes down to how are they going to be able to execute? What are they doing to differentiate their product? And it's kind of like the Berkshire Hathaway or even the Google model, right? Where you can kind of own underlying Google, Anthropic, and Waymo, and various other companies or IP, call it. And so Hyperion DeFi is actually emulating that today. So investors at the retail and institutional level do not just get exposure to Hype, which is still a bit challenging to buy across the exchanges, but you're also getting future validator growth. You're also getting growth of HIP3 markets. We have exposure to both Felix and Kinetic. You're getting everything that we're doing with the work that we're doing in the Hyper EVM. So one example is recently, at the end of November last year, Kinetic, the protocol, did a first token airdrop. So they released their tokens to early users, and we received just around 2 million KNTQ tokens. And at today's market value, let's say they're worth around $400,000. That's just extra exposure, right? We're able to stake the token. We're able to continue to participate in KNTQ, and also our shareholders, as a result, get that exposure. And so we're building the comprehensive full stack accessibility to the Hyperliquid ecosystem, which we think still has so much room left to grow. And this is backed by real fundamentals, real metrics, real revenues and fees that are going back to purchase the Hype token. So it's just a flywheel that we don't see in any other industry. And that's why we are so high conviction on this thesis.
Yeah. And if I just have one point there to your original question there, Cade, is that I think the digital asset treasury model as a whole, it doesn't resonate to a lot of people because they don't understand it. They might think, why does a public company just own a crypto token? Why would they do that? Why can't I just do that myself? And we are the counter to that narrative, where the revenues that we are producing, the growth that we are helping to facilitate on this blockchain, over time, we think people will see us much more like a fintech, much more like maybe Figure, or maybe like PayPal, where they have crypto businesses and treasuries, but it's really about recurring financial growth and how it supports the broader financial ecosystem. There's certainly good reasons and purposes for some of those other digital asset treasuries, but I think we have the most compelling value prop, and we're very excited to continue to show it by how we are operating and for how we will perform.
Yeah, this is cool. I was going to say, if the Hype, that's correct. I did not know about that stat, by the way. All that volume coming from Hypes, with all the volume coming in, that ended up just being your ecosystem. That's very cool. And it totally makes sense. There's a lot of companies out there that probably could benefit if they end up choosing, especially if they end up choosing the right crypto and the crypto token does well. It's obviously even better. We had a couple questions even coming in from the previous space we did last week, and I think we probably answered it, or at least opened up the conversation on the previous space too. But just because we're on the stream, so more from the investor side of things, when they're getting in, they're obviously there's all sorts of things that go through their head when they're looking to get into a company and stuff. But when you're thinking about downside protection when stacking assets in this realm, maybe it's their first time as well. What could you speak to in terms of downside protection / when you're getting into an investment like this, especially if it's their first time, they're not really sure what to expect. They're like, yeah, I'm getting into a stock. It's not like a normal stock that I'm usually getting into. They've got their hands in new things. I'm not fully, I mean, there's a lot of those people who are in here. And even people who are in the crypto world who've just never held a stock. They're just like, yeah, like I wasn't really thinking about getting into the stock world, but now there's this whole new industry I got to think about. I'm bullish on hype. I got to get involved here. What kind of things could you say about this?
I can speak to some of the components very briefly. We've always found that there's asymmetric opportunity when people think that something is like dead or it's over, right? If you look at the market over the past couple of months, I mean, it's been, for lack of a better term, a bit manic, right?
Mm-hmm.
Metals have moved in a way where you're just like, oh yeah, these charts are literally parabolic.
Yeah.
Defense, space, DRAM, right? South Korean indices, like everything is just exploding, and it all kind of makes sense, right? It's adjacent to the AI trade. It's adjacent to like future value just being pulled forward pretty significantly, and everyone is able to pile in. While Bitcoin is not trading like digital gold, and while the metrics of Ethereum even are improving, Hyperliquid is doing multiples in growth. Like HIP3 has only been around since the end of October, right? So we look at those things and we say, okay, I need to bet where people are not paying attention. And we think a venue, this is a great opportunity for us to really speak to. We are doing a lot of things that are very innovative that I think the market does not yet fully understand. But when it does get to the point where everyone's talking about it, it may already be a little too late, because people that have been paying attention, like those here, are actually understanding, okay, if you build real business infrastructure in the right blockchain, and that blockchain hypothetically, let's say, goes 10 or 20x, everything that we've built will also multiply that amount. And the last time I checked, I think Hyperion DeFi is trading at around a $30 million market cap, right? And so it's just like there is so much of growth that's still possible, and it is just a much, just a smaller ecosystem compared to Ethereum and Solana. But we firmly believe that Hyperliquid will become one of the next majors, if not one of the most impactful blockchain ecosystems over the next 5 to 10 years.
Very nice. Yeah. Like we're in cryptocurrency, right? It is volatile. When in doubt, zoom out, look at the macro trends, see that the user growth and the revenue growth on this blockchain being completely unparalleled. It's not so much about your risk to the downside, I think, though that's important. It's also looking at asymmetric risk and return. And so if you think, if Hyperliquid as a blockchain at $10 billion and our stock at 30 million, and you see Bitcoin at north of 2 trillion or 2 trillion-ish, and you see like many other stocks where they are, it's not that it necessarily mitigates downside, but it's important to think about, within one's time horizon, what that return could mean, what could drive it, what could make it happen. And a growing blockchain, early stage, but dominating the areas where it's been focused, is really interesting. And just adding to, like, if we were sitting here a year ago, we would say Hyperliquid is a very interesting cryptocurrency exchange. That's what we would have said, because that's where it started. Yep. Launching into equities and commodities and other pieces is barely even a quarter old. And we helped launch that with our partnership with Felix. And now all the equities, all the non-crypto activity in Hyperliquid is about $1 billion of open interest right now, meaning people with like active live positions on this decentralized exchange that's really just started from 0 to $1 billion in a very short period of time. So from our perspective, it's important that people have a long-term horizon in any crypto asset class. And I want that to be perfectly clear to everyone. But as you think about, what's your risk reward of something more established versus something new and growing? That's why personally I was very excited for this. That's why I left my role as an executive running the full credit book at PayPal from a finance cap markets perspective. And I'm sure that's why Hyunsu is here too, and why we are very excited day in and day out to see exactly what this blockchain can do.
No, I love that, honestly, and I appreciate you guys bring some color there. So say Hype, just these I guess might be hypotheticals, but say Hype, the token performs very well. How does that change the structure? Like, what changes within your company as the treasury company, and vice versa? If the token goes the opposite direction, what does that look like for investors who are thinking about getting into these sorts of digital asset treasury plays?
Yeah, I'll try to kind of cover the core components. To your previous question, Kate, when you talked about downside risk, right? A lot of people always ask questions about, okay, all digital asset treasuries do is issue equity, and it's super dilutive, and it's not good for the shareholders. But keep in mind, we are very, very conscious about our expenses, and we are always finding ways to accretively accumulate hype, because we are, like, all the fundamentals that we talked about on the stream, right, make it very clear that it has stronger tailwinds than other digital assets. We take that hype and we deploy it to any of our currently existing 5 business verticals, whichever we think can generate the most yield and we have the best opportunity to scale and bring more value to Hyperliquid and grow the ecosystem. And so when you talk about, for example, let's say hype were to go from 25 to 100, where it is today, and that would mean our validator revenues, our staking commissions, the work that we're doing on chain with the Hyper EVM products, we expect Hyperliquid has multiplied it in price, because HIP3 and other fees are really starting to accelerate, right? So we have designed our business in a way where we are capturing a share of each of those components. And then, if again, let's say if hype were to 4x from here, and now we have 4x our balance sheet, we are then able to access borrow and lending primitives on the Hyper EVM, right? We just have that much of a larger capital stack. And then to the downside, we've already kind of seen that happen, right? From 60 down to 25 or so. But at the same time, our revenues on the pure business side, like HIP3 markets, have actually grown month over month, because they are earning revenues in dollars, and the dollars are being generated from financial activity. So as long as people are trading assets on Hyperliquid, Hyperion is in a position to generate revenues from those activities.
I was going to say that definitely separates you guys from a lot of it, because that's basically the main problem that people were expressing interest in with most companies, is they're like, dude, how are y'all going to make money every month? If the token goes down, you guys are cooked. And so that's very interesting. You guys have a very interesting proposition there with hype. Dave, I saw you unmuted, please.
No, I was just saying, to your question, like, how does it change how we're operating? We are a very small team with a well-designed, well-designed balance sheet. We don't take a ton of leverage. We maintain a lot of liquidity. And all of these blockchain businesses, from our perspective, are infinitely scalable once they're built. We're always going to be changing. We're always going to be looking at what is the best use of our tokens and of our time in any iteration of what might be best for the market. You can expect us to continue to be on the cutting edge and outperform.
Very cool. This is one of my last questions here. Hyunsu, maybe I'll start with you. Like, what are you hoping to see in the digital asset treasury space in the next? I'm not sure what the right number is to put, like 2 to 4 years, 5 to 10 years. Like, I'm not exactly sure what the right place is, but maybe you can kind of answer that however you want. If you're super long term, if you're more in the short to medium term, but what are you hoping to see for the industry?
I think the most important thing that digital asset treasuries can do is bring value to their ecosystem and generate revenues from doing so. So across the board, whoever the leaders will be in each ecosystem, I think that is what they should be measured by, is how are you bringing value? How are you actually contributing to the metrics that enable your ecosystem to grow? And again, the really unique point about Hyperliquid is that those very components lead to buybacks of the token. So we are fully incentive aligned to continue to accelerate that. And then in a longer out time frame, I just believe that a lot of these digital asset treasuries, if they just offer exposure to the underlying token, then it becomes challenging to answer the question, well, why don't I just buy the ETF? Or why don't I just buy the token myself, because it's going to be more accessible? There has to be something else that they're providing. And so with Hyperion, we believe that we are in the early phases of solving that as we continue to grow our presence in the Hyperliquid ecosystem. And I think broadly, we expect that we will be right, because everything that we are seeing today in terms of the fundamentals, the metrics, showcase that everything that we're doing and the Hyperliquid team and the ecosystem is working. And those kind of components, there's a really famous saying in crypto, and it's liquidity begets liquidity. I heard that a lot at Dharma, and it's the effect of where once you have mass effective stable coins or users or for example, all the meme coins on Solana. But if you're trading purely all financial asset classes on Hyperliquid, institutions, family offices, sovereign wealth funds, whoever you want is coming, and they're positioning, compounding, hedging, delta neutral, whatever they want all the time, 24/7 across a variety of markets. it's going to be the de facto venue for financial activity. And that means more buybacks, more ecosystem growth, more participants. And that is something that we expect to compound pretty significantly. And Hyperion our goal is to become the company that's positioned at the center of that.
Very cool. Very cool. Dave, same question over to you if you'd like to take that one on.
Yeah, sure. Digital asset treasuries should be beacons for the communities and the tokens that they support. They should be involved with investors and retail and through policy, through current events, and should really be not just a entity that holds the asset, but an entity that helps shape the blockchain for the better, to ensure it's enduring, to ensure that it's serving the community, and to ensure that it's differentiated among the various points and elements of competition that are out there. So I believe that is who we are. I believe that we have already positioned ourselves in this way. Our flywheel is unmatched by the businesses that we have created, which make money for us and drive further adoption into this highly dynamic ecosystem. And as this blockchain becomes more and more adopted, which we do believe is truly inevitable, and you continue to see more and more. In fact, Kinetic recently launched fixed income on its markets on top of Hyperliquid. So the sky is the limit for what this blockchain can do. And we think it's the right community and the right economics to do it. And that is who we aspire to be.
I love it. And I was going to say, Hyunsu, any final thoughts, any last announcements coming up that people should be aware of? Obviously, if people want to find out more, hit the prospectus link right below our stream, and then give them a follow right above our face, like tag them. But anything else coming over the horizon for people who are watching?
I can't say just specifically, due to MNPI and all those other fun public company things, but I will just say that we are working hard every day, and there has been significant institutional. I just came back from CFC in St. Moritz for the crypto finance conference, and Hyperliquid is basically on every major institution's radar. How to access it, how to make sure that they are where a lot of the financial activity is going to be. And Hyperion DeFi was in every conversation, figuring out ways to help facilitate those migrations. And so that obviously is a big commercial and reputational and institutional opportunity for us. And we just would say that there is a lot more to come. We are still in very early phases of what we're building for the long term.
Amazing. Well, listen, you guys heard it here first. Hyunsu, Dave, thank you so much for coming on and talking about Hyperion, talking about Hype ecosystem, talking about the crypto treasury space. Just overall, I think there's a lot to learn here, and the space continues to grow. And so we'll definitely be monitoring it. For everyone who's back at home, thank you all so much for watching. If you haven't already, please take a second, repost it, quote tweets, do all the things, let people know, tag a friend. And if you guys have any questions, drop them down below. We'll see if we can get to it on the next conversation we have with them. Have an amazing rest of your day, everyone. Take care.
Thanks, everybody.
Thanks all.